Hi, welcome back to the channel. My name is Julio with Keepus Bookkeeping, and in this video, I'll be speaking about clearing accounts, what they are, how we use them, and why we use them. So first, we're going to be understanding what clearing accounts are and why they're important for e-commerce. When we're talking about clearing accounts, they're basically temporary accounts because in e-commerce, there are so many transactions happening that we have to assign them a place until we can reconcile them and match them basically with the deposits that come in through the bank. So like I said, they assist with timing differences and they act like receivable accounts because they're amounts that we sold, but we haven't yet received. So the reason we use clearing accounts in e-commerce is that there are so many transactions happening, and because of payment processors, we need a way to reconcile them and we need a way to hold them until we actually get the money in. So this is an example of, let's say, 3 days of transactions in a Shopify store, right? So let's say on day one, you make $2,500 in sales, but out of those 2,500, 500 are discounts and 100 are refunds, right? So on day two, the payment processor processes the payment. You make the sales on day one, but you don't get the money until day three. We see a deposit on our account for $1,850, which are net of fees. Stripe, in this case, the payment processor that handles the sale, is Stripe. So they take their fee. Let's say their fee, hypothetical numbers, let's say their fee is $50. We see that on day three, we have a deposit of $1,850, but on day one, our sales were $2,500. So we have to reconcile that and make it make sense, right? So we have to take into consideration the discounts for 500, the refunds for 100, and the Stripe fee for $50, right? So if you have 2,500 in sales, but you have a deposit of 1,850, you have to take into account everything that happened and everything that occurred during those 3 days, right? That's why clearing accounts are important because they're an account that holds the sale and holds the money. So basically, this is an example of what happens. It gets more complex, but because there are multiple sales channels and multiple payment processors. So I'm now going to show you how it works in the QuickBooks setting. And you'll see how the sales come in. These clearing accounts should clear out every month, basically. But because of timing differences, sometimes there's like a tolerance of a day or two in which it'll be off. But that's just e-commerce. It just happens like that. But they should clear out within a couple of days of each month. So we'll see here. I'm going to show my screen. I'm going to first show you by transaction type. These are all the sales which are brought in through journal entries, right? I use A2X to bring all these in. This is the Afterpay clearing account. So these are all the sales and these are all the deposits, right? I just separated them so you can see the difference. This is the deposits and these are the journal entries, all right? Now I want to put them in order. So now we see the first thing is 8231. That's a deposit, right? And then there's a journal entry for the sale of the product, right? And then we have all these deposits and the sales and everything. And the way it works is you'll see at the end of October, it's 1 penny, 1 cent difference, right? Which could just be rounding, right? But the point, like I said, the point is to get the clearing accounts to zero because this is just temporary, right? We don't keep the clearing accounts with the sales. Once we get the deposit, we have to categorize the sale, categorize the discounts, the refunds, the fees, and make sure we get that out of the clearing accounts. Like I said, they're just temporary, right? So you can see at the end of every month, at the end, October 31st, 1 cent, right? And then again here at the end of November, it's 1 penny. Now that you know what clearing accounts are and why we use them, and you saw a little bit of how it works in an actual clearing account that you make a sale and it gets recorded into the clearing account until we get the deposit, and then once we get the deposit, we have to reconcile those two with the discounts, the fees, the refunds, everything else, and then that gets taken out of the clearing account and put into the correct account, and it gets the clearing account into zero again. Like I said, this is temporary accounts, all right? So I'm going to show you now best practices, and then I'm going to show you an example so you can see a little clearer what happens with the accounts. So these are the best practices for clearing accounts, okay? It's best to have one clearing account for each payment processor. Let's say that you use Stripe, let's say you use Afterpay and ShopPay. So it's best to have one clearing account for each. This way, it's organized, and this way you can see each stream of revenue, which one is doing better, which one is you have more data. It's important to have data for bookkeeping. You want to see how much Affirm is doing, how much ShopPay is doing, Stripe. Remember that deposits are net of fees. So when we saw the deposit on the bank feed, they're net of fees. So you can't forget to record the fees from the payment processor, right? So let's say, like I showed you in this example, the deposit of 1850, it's net of fees, meaning that Stripe already took out their fee, their money, right? If you try to reconcile 1850 to 2500, you're gonna be off $50. And if you forget to record the $50 fee, it's not gonna match, it's not gonna reconcile. So keep in mind that the deposits are net of fees. Also important to keep in mind that you have to reconcile every month. Like we saw on the account, on the actual clearing account, we see that every month the account goes back to zero because, like I said in the beginning, these are temporary accounts, right? They only assist with timing differences. That's why they also act like receivable accounts. So we put the sales into the temporary account, which is the clearing account, until we get the deposits. We get the deposits, we record the fees, and this way we can reconcile them with the sales. I think you already saw when I showed you the clearing accounts in QuickBooks, it's that help of third-party apps, they're recommended because, like I said, in e-commerce, Shopify, we have so many transactions happening. It could get hectic and it'll be hard to reconcile if you do this by hand, right? So it's important to have the help of third-party apps. Now, this doesn't mean that they'll do everything for you. You still have to do work. You have to be there checking that they're doing the correct job, because what if they bring in the sales from Stripe and they put it into a firm, right? Or they bring the sales from PayPal and they put it into ShopPay. So that's why you have to keep an eye on it. Every month it's good to go through the mapping for each gateway, right? And make sure that everything is fine and everything is working accordingly. Now that we know this, right, I'm gonna go through another example. It'll help you see it better. But so this is the process, right? So a transaction is recorded, or a sale is recorded through A2X as a journal entry, right? Then the deposit comes in to our bank, right? And it comes in into the bank feed, right? So let's say in this case, in this example here, we have a sale, a journal entry that A2X recorded of 1900. So then we see that in the bank feed, we have a deposit from Stripe 1850, right? This 1900 was recorded into the clearing account. Then when we got the deposit from Stripe from the bank feed, we took 1850 out because we had the deposit, right? So we reconciled them. So now we have $50 left in the clearing account. And how does that come out? With the fee. We have to remember that we have to record the fee. That's what I say. If you forget to record the fee, you'll have $50 left in the clearing account. And month after month after month, $50, $50, the clearing account will continue to grow, and you won't know why. So make sure you're recording the fees, because at the end of the month, the clearing account should be at a zero balance. Should be. I say should be because let's say you make a sale the last day of the month and the money doesn't come in until the second, right? So that's why it could be a little complicated, especially with multiple payment processors and multiple sales channels. You might have a balance in the clearing account at the end of the month, but it should clear out within a couple of days. Some challenges that we have with clearing accounts is that, like I mentioned before, is that we have high volume transactions. Another challenge is the timing difference, which I also mentioned this before, that you can make a sale on the last day of the month and the money won't come in until the first or the second. Also, in e-commerce, sometimes we have refunds and chargebacks, right? Or maybe a credit card didn't go through. And that complicates things, right? Because you made the sale, but the money didn't come in. So you'll have sales that don't match with the deposit because of refunds or chargebacks. And important to also reconcile every month. Now, as you can see, e-commerce bookkeeping, it's different from regular bookkeeping, right? It is recommended to have a specialty, right? Just like doctors, you have your general doctor who knows about health and knows about your body. if you have a skin issue, they'll send you to a dermatologist because they specialize in skin, right? So same thing goes with bookkeeping, right? It's important to keep in mind that specialized skill, it's crucial, right? You don't want to have a regular doctor looking into a particular problem that you're having in your skin, because even though he might know about the skin, he doesn't know everything about the skin, right? You go to a dermatologist that specializes in rashes, right? So, having said that, it's important to keep in mind a specialized bookkeeper. I've been an e-commerce bookkeeper, an e-commerce accountant for more than 5 years. I specialize in this field. I specialize in e-commerce, Shopify. It's to take the stress and complexities out of e-commerce bookkeeping because, like I said before, it's not regular bookkeeping. There's a special skill and a special knowledge that you need to have. Which I'm not saying that other bookkeepers can't learn. Anyone can learn bookkeeper, right? Just like anyone can be a cardiologist, or if you put in the time, you can be a dermatologist, right? But there are some general doctors, and then there's cardiologists, there are dermatologists, right? So it's important to keep in mind the field that you're in. It's important to keep in mind the results you want, right? If you want something done the right way, you have to go to somebody that specializes in it, somebody that handles that every day, somebody who lives in that world, basically, right? Think of opportunity cost. You can learn, sit down and take some courses on bookkeeping and become specialized in bookkeeping for e-commerce stores, right? Or you can just focus on growing your store. Make sure you're focusing your attention on what needs attention. I'm certain that if somebody wants to have a business baking cakes, it's because they like baking cakes and they don't want to spend their time bookkeeping, right? So yeah, I'm a specialized e-commerce bookkeeper and I specialize in Shopify bookkeeping. I also do Amazon and TikTok shop. And basically my job would be to take care of the books, ease the stress and complexities of e-commerce bookkeeping. If you have any questions, you can put them in the comment section below. If you want to get in touch with me, there's also a link below so you can reach me and see how I can help you. But other than that, have a good day and I'll see you in the next video.